What is going on, everyone? CryptoVatsik here with a technical analysis video for you today. In this video, I'm going to be covering HBAR HEDERA hash graph. And if you enjoy these videos, I'd really appreciate it if you smash that like button and subscribe to the channel for future updates. As always, nothing of what you're about to see is considered financial advice. Okay, guys, let's get into the HEDERA HBAR chart. So first things first, it's always good to start on the high time frame. We are currently on the weekly time frame right now. And there's a few things I'm noticing as we are getting our bullish momentum. After HBAR bottomed out and we made our higher low and consecutive higher lows thereafter, forming our overall accumulation range down here, okay? As price was doing this, we made very clear that we had a bear market ceiling. In other words, a major resistance or a prolonged resistance that typically price struggles to breach for quite some time, but once it does, it gets this release and is able to really build up momentum, which I believe is currently what we are seeing now. We are making higher low and gradually increasing this price expansion trend out of the bottom. So the assumption is when we make our next higher high, our next low should be a higher low until we come up to a point where there's price exhaustion and we put in a longer term correction on account that we break that parabolic trend. What I'm noticing is that we've got a flip of that bear market ceiling on the last 4 weekly or 5 weekly candles. Okay, so we've been able to break that prolonged resistance, which stemmed from this point of breakdown over here back in 2022. We've made an official higher high on the weekly time frame, so that's good to see on the high time frame, and with what looks to be a successful retest or back test of that bear market ceiling level that I have marked out here in this dotted line. So it's really good to see, because next, if we look left at this price action in here that we had in 2022, basically a capitulation event, an absolute dump down to this low, leaving an inefficient void in price within that yellow vertical rectangle, meaning there's not a ton of data to suggest within this price action that there would be a very significant sign of resistance. Now, I try not to go too far back in time, but what I have noted here is this red square, okay? So there was a lot of activity within this square, okay, at the time that we made this bottom back in 2021 in the summer. Lots of wicks down to liquidity zones, putting in that bottom and really fighting to hold some sort of level in there. But the level's not clear to me. So I've marked out the level that makes the most sense in my opinion, and it's right here on that dotted line at just under 20 cents. And the reason is because it also formed a form of a baseline or temporary baseline all through these price action. And what that did was it gave us a clear point of breakdown. When that level was lost, we had capitulation. So our breakdown point right there, loss of the level, whatever you want to call it. And it does coincide a little bit well as well in the red box here. You know, you can see price action trying to maintain that level for some time until it was lost on the candle closes here, acting as that resistance now as price is trading within the red box until it was breached and it was up. So personally, that's the level that makes the most sense to me, rather than going into lower time frame and marking out any of these wicks or, you know, candle closes. There's just too much price action in there. It's a little messy. So when I start to see messy price action, I really try to stay to the high time frame. I mean, we could even check out the monthly. Okay, so here it is on the monthly time frame. So there you go, even better on higher time frame. No candle closes on the monthly inside of red. Only these 3 large head and shoulder wicks that we've got here. So as I said, for me, it just establishes that level that I'm interested in personally, which means that that's my next area of resistance at just under 20 cents that I'm eyeballing. Because in this price action down here, there's not much to suggest to me that we're just going to stop out at one of these levels and then have that major correction. It's obviously possible, but these inefficient voids in price often lead to a knee-jerk reaction back up to that point of breakdown. You can see it in previous price history as well, other inefficient balances. Okay, when we had this point of breakdown and capitulation, there was an inefficient balance in price within these red candles, and you can see price bouncing all the way back up to, you know, about 75-80% of that move. So this being a little bit more condensed and shorter time frame versus the longer time frame that I'm looking at here out of our accumulation range. And of course, you could argue that it's a bull market, so we're eventually going to get there anyways. But the point being is that I don't think it's just going to happen eventually. I do believe it will happen sooner than later on account that we have flipped that bear market ceiling. We are now trading within that kind of no man's land in here. In other words, there's no real range to work within here, whereas down in our accumulation, this is essentially a range from our range high here of resistance down to the low Okay, from these highs really establishing our range high, and then of course our low with all this interaction at the equilibrium as resistance or support throughout the accumulation phase. So in my eyes, it's really just all about ranges. And we've now broken outside of that range, okay, the resistance, we've broken outside of the range high. And as I said, kind of entering that expansion zone or no man's land. Now, the reason for the red square though is that there is a possibility, even though that is quite some time ago, this was back in 2021, there is a possibility that we find some chop within that red zone and come short of our point of breakdown that I've marked out here. So if you extrapolate that out, then there is definitely a possibility of something like this happening. And it could be messy, just like it was messy back here in 2021. And other exchanges, it might not have been messy. It might be very clear, but at least on this chart, it's not as clear to me. So it's a large box, it's a large area to work with. But if you catch some sort of low and you sell within some sort of mid-range of that zone, you're sitting pretty, you're taking profit, and you're going to be happy. Nobody buys the Pico bottom or sells the Pico top, right? Another thing that I will bring to your attention is the fib extension. We'll take it from the current leg. Okay, so I'm talking the current leg beginning from its low and to its high. If we take the fib extension tool, we start to look at, a 1-to-1 extension or potentially 1618. There is nothing lining up with the point of breakdown level here, just under 20 cents. In terms of the fibs, there might be another fib that I'm not displaying that does line up with it, but I like to stick with these. So if we look at the very least in the shorter time frame, a 1-to-1 extension target, it would line up relatively well with the red box that I had said earlier, somewhere within that zone as a potential correction location. It's an estimate. It's, using data to come up with the most probable area. And I like to use zones versus just precise lines. I do have precise prices marked out here, but in terms of finding a bottom location or a target to sell at, it is, in my opinion, better to be a bit more flexible and loose. And with that, obviously monitoring price action, waiting for market structure breaks, and then taking action, but not everyone has the time in their day to always be watching price. So if we're looking at a 1-to-1 extension, we can take the fib and look at the previous leg as well, from its low to the high and correction, and see where those fibs line up. Okay, so we've got the 1618 lining up just under the 1-to-1 extension on this current leg, which ultimately increases our zone, but does add a bit more confluence to the zone being accurate. So essentially, green is my next area that I'm looking at, and that ranges between 15 cents and 17.5 cents. Of course, if you're looking shorter term, using a target zone to sell at is ideal, but if you're looking longer term, then clearly you've got higher prices on your mind and on your objective. So if we start to look above, as I said, I've got these precise levels here, point of breakdowns marked out. We've got clear SR flips all throughout this messy price action, but it is very clear. And then same for up here as well at about 33 cents and the lower one being at about 25 cents. So lots of levels to work with, but then ultimately I believe that this is kind of that last area of resistance before we enter, major macro expansion in the bull market. But of course, you don't want to be waiting for expansion. You want to be getting in on that accumulation or vertical accumulation or those consolidations, down here as low as you can, obviously. So that's long term. I don't like to predict too far in the future. I like to use data to predict what's the most probable outcome versus just saying, I think we're going to this X amount of value, or, it's going to stop out here sort of thing. It's better to monitor the price action, have those target zones, but adapt as necessary. For example, if this fails and we break this parabolic trend that we've got here and we start trading all of a sudden back underneath this bear market ceiling, something bad has happened, something very wrong's gone sideways, and therefore everything above here is pretty much out of the question until further notice. Do I think that's going to happen? No, I don't. Do I think we can get more consolidation though before reaching green and above? Yes, I do. This is what we like to see on high time frame as well. On the weekly, we're well above the 100 exponential moving average here in the thin gray line, okay? Putting in a good gap between price action and that EMA. So it's really good to see, I bet a lot of the other EMAs are starting to have that classic cross, at least on the daily time frame, maybe even the weekly. Let's just take a look at them quickly. We'll mark at the 20, the 50, and the 200. Okay, so the fat one here's the 200, the thin gray one here's the 100 that we had previously, and then we've got the 50 and the 20. And so So we've got the 20 starting to cross, the 50 is not quite there yet. And of course, what we want to see is all of these eventually cross the 200 EMA here in the fat gray line, okay, where it looks something like that. So time will tell. There's going to be lots of time to really see this develop. And the other thing about monitoring price too is, yes, we've got this target zone here, but ultimately, as I said, I'm looking at this point of breakdown that I had marked out here, okay? As I said, just under 20 cents. That's really the shelf that I'm looking at on a macro scale. This kind of green target zone is still sitting in that no man's land. It's really denoted from this price action over here as a potential stall out location. So the reason why I say we need to monitor price action is because if we end up start getting market structure breaks sooner than later on high time frame, so if we start to see price do this on high time frame and we ultimately get a huge market structure break, then I think we're back down to this bear market ceiling here that sits at just under 10 cents. Okay, so for a more of a macro correction, or ultimately that retest, because we do have a back test here, okay, these two wicks here, but it's ultimately on the way up. The leg is seemingly continuing, whereas a retest is where we put in a major high well above the level and then we come back down and retest it, much like we had down here. As I said, within this range of accumulation, take the range down. Okay, we flipped the equilibrium here on this candle's wick right here. Okay, that is known as your back test. Then we put in a major high and came down and ultimately retested it on that equilibrium with success that time in expansion and break out of the range high. So that is what I mean by a retest on a macro scale. And this ultimately took 1, 2, 3, 4, 5, 6, 7, 8 weeks to take place. So it can really mess with traders and investors, and in that time mess with their emotions, and they see price coming down for it ultimately to just reverse back up. Or they think we're never coming back down to that level again, and they just see up only, and they think we're coming to green, but we get that market structure break, we get those signs, we haven't had that retest. So then it's just about anticipating where price could go if you start to see signs like that and having, a plan B, so to speak. But ultimately, I'm looking at less than 20 cents, just up here around 19 cents as kind of that target. So price could do something like this and continue on the parabolic path and actually slice right through our green target zone here, which is also another reason why you want to monitor it rather than just sell immediately. But to each their own. If you're doing a short-term trade, then yes, there's nothing wrong with taking profits. But if you're going long-term or you're wanting to just swing trade on the way up, then you're going to have to use your own strategy that works with points of reference in the meantime. And then perhaps we do end up coming up to that 20 cent level, to that point of breakdown, to the top of our red box of resistance over here, and then perhaps from that point on we come back down for a correction. So time will tell. Nobody knows exactly what's going to happen. It's impossible to know, but it's how well you can evaluate the price action in front of you. Let's drop down to the daily time frame and drill into what we're currently seeing. Okay, so I think actually let's go back to the weekly. I think there's a single candle that has massive wicks to the downside and upside. Yeah, this candle here, this weekly candle that we had on first week of March, forms a nice range for me from the high of the wick to the low of the wick. I like this range personally. This really set that range. It set the tone for following price action with, this sweeping high and sweeping low, but it's a perfect range candle. And even on high time frame, you can currently see the equilibrium of the range really being respected here as a bit of an SR, okay, with the candle closes either above or underneath. So now let's drill into the daily and look at that range. So yes, we have a clear range to work with here, and you can clearly see a major wick here being rejected off of the highs. So like it or not, we are still range bound between the range high and the range low. This price action in the last few days would have really tricked a lot of people out to think that we've just bottomed out, the correction's over, and we are going straight up. But you can obviously see the nasty wick that we're currently getting on this daily candle. So I wouldn't even be surprised if this candle ended up red and closed red below our equilibrium here. But it doesn't mean that we're just coming straight down and breaking out of the range. It just means we're consistently range bound and we're not getting that momentum just yet. And potentially we sweep these lows again and continue to chop until we do reclaim the equilibrium, which is exactly the price action that I'm going to be looking for. It is possible that we do continue this though, and we do close above the range EQ. and we continue to fill in this wick, in the following few days. But I would still expect us to put in some form of a higher low off of this low here. So perhaps we come back down, we retest the range equilibrium here for another higher low, and then it's chop city within the overall upper 50th percentile of this range until we get that breakout. I hope you found something helpful from this video. If you did, I would really appreciate it if you smash the like button, and don't forget to subscribe to the channel. Thanks for joining again, you guys, and we will see you later this week. Adios.